In this video, I'll show you how a basic Australian tax return works step by step using the ATO's myTax after you linked it with myGov. I'll show you what usually gets pre-filled and the mistakes that can delay your refund. By the end, you'll know what the main sections do, what usually fills in automatically, and what you still need to check before you lodge. This one is for basic returns only. If you've got rental property income, capital gains, sole trader business income, or more detailed ETF tax reporting, I've got separate walkthroughs linked in the description you can watch later. Before we start, here's one thing to keep in mind. In a real return, a lot of your information is pre-filled automatically. Things like your salary, tax withheld, bank interest, dividends, ETF distributions, and private health insurance details are usually sent to the ATO for you. This simulator doesn't have that pre-fill, so I'll enter everything manually so you can see how each section works. Most income information starts showing up from mid-July. ETF and managed fund data often comes later, sometimes into late July or late August. Things get added as they become available, so some items can show up earlier and some later. If you own common Australian-based ETFs, early August is often when your return is most likely to be pre-filled, but even then it may not be complete. And some things, like investment property sales, foreign ETFs, and most work-related deductions, may not pre-fill at all, so you still need to check everything yourself. In this walkthrough, I'm using a simple example, a full-time employee on $82,000 a year, with a low-income spouse, 2 children, some bank interest, and a couple of ETFs with small distributions. This part matters more than it looks because a couple of questions right at the start affect what happens later in the return. The first one is residency for tax purposes. If you're not sure, don't guess. Open the Help section and work through the questionnaire before you answer it. The next one is the spouse question. This one matters because it can affect Medicare, offsets, and other calculations later, so it's worth taking your time with it. For this example, I'm selecting yes to a spouse for the full tax year so you can see how that flows through the rest of the return. Once those answers are in, the rest of the return becomes much easier to follow. Let's move into income. Here I'm going to select that I received salary and wages. I received some interest. I had trust income. I had work-related expenses and gift and donations. I'm going to click Other Deductions just in case. And that's it. I'll click Next. Let's move into income. In a real return, your employer sends your income statement straight to the ATO, but I'll enter it manually so you can see where everything goes. I'll start with salary and wages. I'll click Add Edit. My occupation, here I'll just click something like accountant. Then I'll add salary and wages. I'll put my payer's name. I'll put my payer's ABN. My tax withheld in this situation was $18,200. And my gross payment was $82,000. Did you earn this income while you were in Australia? And I didn't receive any allowances. I didn't have any reportable fringe benefits, reportable employer superannuation contributions, workplace givings, unions or professional fees. I can enter it here or I can enter it into the workplace deductions, which I'll do later. I had no other items here and I'll click Save. And then I'll click Save and Continue. Now this pre-populates straight into my income section here. Next, I'll add bank interest. My financial institution, I'll put CBA. You don't need to put your account number. You can put just the name of your account here. Right. I'll just put one account holder there. Gross interest, I'll put $36. There was no TFN amounts withheld because I provided my TFN number to my Australian bank. If you didn't, this is where you'd claim it back here. Click Save and Save and Continue. And now your interest section is now brought into the main screen here. The next part catches some people out, so I'll go through it slowly. Share registries and ETF providers usually pre-fill your dividend information, but because the simulator doesn't have pre-fill, I'll enter a simple example manually. I'll start with a franked dividend. Now, as you can see here, I didn't select dividend, so I need to go back to the main section and then select dividend here. Now I can go back into the main section of the return, and you can see the dividend section was here. I'll add a section, and then I'll press add again. I received some CBA dividends, one account holder, the franked amount, which is coming straight from my dividend statement, 120 franked amount with $51 franking credits. Again, coming straight from my dividend statement that I get from my ASX listed investment. I'll click save and continue. For each dividend that you receive, just keep adding. If you have multiple dividends from the same investment, feel free to add them as a separate line or sum them together, whichever is easier. And likewise, if you have an ETF distribution, go to the Manage Fund and Trust Distribution section here and add the Manage Fund Distribution. Add the name just for your own reference. And this is where it's good to hang out for the tax statement, because it actually tells you which section, which type of income was streamed to you via a distribution. If you don't have your tax statement, I suggest that you wait for this. If you do have it, then feel free to complete it as per the sections. You can see 13Y, 13C. The actual statements are referenced on the tax statement from the ETF investment, so you can actually plug these numbers straight into here using this referencing system here. For these purposes, I know that I have received a franked distribution of $85, and I'll leave that there. I know that's not probably exactly 100% right for VAS. They usually do have franking credits and some capital gains in there, so I know that it's not 100% correct. So, but for the purpose of this, I'll just leave it as is, and then I'll just click save. But make sure that you use your ETF tax statement, and I have a video showing you how to enter that correctly step by step. In a real return, your ETF annual tax statement is what helps you work through this properly, and tools like Sharesight can help you keep track of the details. Now for the part most people care about, the tax deductions. I'll work through these one by one so you can see where each amount goes. The key rule is that the expense needs to relate directly to earning your income, and you need to have paid for it yourself. Because this example claims more than $300 in work-related deductions, you'd also need to keep your receipts and records. I'll start with union fees. There was a section where they had union fees, and I can put in this section here $320. This is just a nice easy way to put it because it's linked to my salary. It won't be a reduction of income. It will actually populate down here under the deductions. So if you don't put it into the income section, you can go into the deduction sections and add it separately down here. It's just an easy way to enter when you're entering your income, because usually union fees are also included on your payment summary from your employer. Next, I'll add work-related subscriptions. So now I'll add a deduction. Now, other work-related expenses is usually where you put subscriptions. And these are directly linked to professional subscriptions that I use as part of my employment. They are not newspaper subscriptions or magazine subscriptions that are deemed to be personal use and which you can't claim a tax deduction for. Then I'll enter work-related vehicle expenses. Under this section, you'll add employment, travel. The calculation method I'll use is the cents per kilometre, noting that you can only claim a maximum of 5,000 kilometres. If you want to claim more, you need to use the logbook method, which is a bit more complicated. Now I'm going to claim 500 work-related kilometers at 88 cents per kilometer, which comes to $440. 500 kilometers I'll enter here, and that calculates to $440 at 88 cents per business kilometer traveled. Now I have records of what this travel makes up using a diary for my travel that I've done for my work. Now I'll click save, and then that's recorded as well. Now I'll add home office expenses using the fixed rate method. This is for working from home that has been enabled since the COVID years. This is also under other work related. Now under the fixed rate method for 2026, I'm using 70 cents per hour. I'll assume I worked from home 2 days a week for a standard 8-hour day across 48 working weeks this financial year, after taking 4 weeks of annual leave throughout the year. That comes to a claim of $538 for the year, which I'll enter here, and I'll click save. Then I made some donations, gifts or donations. I made this to the Cancer Council, and I have kept my receipts. It is a deductible gift recipient, so I'm allowed to claim a tax deduction for the $50 that I donated. And finally, I'll enter last year's tax agent fee of $180 that I paid in the prior tax year that just finished to complete my tax return. So this is under cost of managing tax affairs, and it's the other expenses incurred in managing your tax affairs. I'll just put it as tax agent, and I'll put the $180 here. If you did have any general interest charge from the ATO, you could also claim that here. So right now I'll save and continue. So now you can see I've got the income and the deductions, which has brought my taxable income down to $80,614 with $18,251 of tax credits. Now, as you can see here, my details are not complete, so I need to go in and add. Now, you need to put the details of your spouse in here. The actual birth date is important as well, and I had a spouse for the full year. I'm going to put a low amount down there for $18,000. The spouse did not receive any trust income or family trust distributions or reportable employee FBT amounts, did not receive any Australian pensions or allowances, did not have any investment losses or anything like that, and no child support. Okay, no, I did not have a family assistance debt, so there's no other items here to fill in this section here, and I'll click save and continue. Now, under the Medicare and private health insurance, this section that's easy to skip past, but it can change your rebate and Medicare outcome. In a real return, your private health insurer sends these details straight to the ATO. Here, I'll enter them manually. If the policy covers both spouses, be careful how the rebate is claimed in your tax return. Whether it all goes into one return or is split across both, it needs to be consistent and match the private health insurance statement. If it doesn't, the ATO will automatically adjust your tax return, so just make sure that you enter it correctly and consistently. Now go into the Medicare and private health insurance section, add. Now you need to make sure that you declare all your dependent children. So I'll enter 2. I'm currently not exempt. I'm not a foreign resident or not entitled to Medicare benefits, so I'll answer no. Were you and all your dependents covered by an appropriate level of private health insurance cover for the full financial year? Yes, I was. Now, if you're below the levy surcharge threshold, you won't pay any additional tax, but if you are, there'll be additional taxes levied on you and also the number of children that you have as well. So it's often worth having the private health insurance to avoid any additional tax, especially when your income gets above the Medicare levy surcharge threshold. So go in here and enter the health insurer ID. This should keep coming straight from the actual statement that your private health insurer should send you. They're usually due around July, sometimes early August, depending on which one you're with. put in your health insurance number. Okay, so you've got 3 tax codes. You are claiming your share of the rebate for the policy, so that's assuming you and your wife are both lodging a tax return. The most common method is C. Claim code E, your spouse is claiming your share of the rebate. So this is sometimes for the low income spouse, lets the other spouse claim the amount so that they pay less tax. And if you're covered as a dependent person on a private health insurance policy, so this is usually for young adults that are still on their family's private health insurance policy and are exempt from the Medicare levy surcharge because they're still covered under a private health insurance policy. So under the tax claim, click C, E, or F. I'll click C in this situation. Now, these numbers for J come straight from the actual statements, and I don't want to claim the spouse's share. Click Save just to make sure that there's no errors. If there is a duplicate error, and check and correct. Okay. So I'm claiming that. Record complete, save and complete. This is one of those sections people rush through, but it can affect whether you get the right rebate and whether the Medicare levy surcharge applies correctly. Since the private healthcare rebate is being phased out, many people are getting caught out with having to pay back some of the rebate they may have received as a reduction of their monthly premiums. If that's you, then you should contact your private health insurer to lower the rebate in your monthly premiums going forward, or else you'll have to pay back the extra amount that you were not entitled to when you lodge your tax return. Because we've added a low-income spouse and 2 children, the Medicare levy calculation adjusts automatically here. Once all of that is in, we are able to get to the tax return summary to estimate the tax refund when you press the Calculate button here. As you can see here, the estimated tax refund I'm going to get is $2,104.76. This is a combination of the tax deductions that I've paid and also the overpayment of tax that has been withheld from my salary as well, that I'm getting back once I lodge my tax return. If you click the Show Calculation button, you'll see your taxable income, tax payable, Medicare, offsets, and whether you're getting a refund or need to pay more. Just remember, this is only a simulation, so your real return will use pre-filled data. Also, just because your tax return says that you're going to get this refund may not actually happen if the ATO reviews your tax refund and sees that you've missed certain types of income that was available after your pre-fill has been populated. Also, other things that can affect your refund include whether you owe the ATO money or there's child support. The ATO can reduce your refund to offset these payments. Before you lodge, this is the point where I'd slow down and run through the final checks. If you're new to Australia or here on a visa, don't assume your visa decides your tax residency. Use the help section and questionnaire that I pointed out at the beginning of this tutorial before you answer that first question. If you had a spouse at any time during the year, answer that carefully because it can affect Medicare, offsets and other calculations across the return. If you earned ABN income, did freelance work, drove Uber, or ran any kind of side hustle, this basic return may not cover everything. If you sold shares, crypto or property, or you own a rental, don't guess your numbers. I've linked my capital gains and rental property walkthroughs in the description as well. If you invest in ETFs, early August is often when your return is mostly pre-filled, but even then it may not be complete. Wait for your annual tax statement before you lodge. First, make sure your pre-fill looks complete before you lodge. If you lodge too early, such as early July, and leave income out, the ATO can amend your return and recover any refund that shouldn't have been paid. And before you finish, make sure your bank details are up to date, so there's no delay in receiving your tax refund into your bank account. So that's the basic process. We worked through the main sections of a simple return, what usually gets pre-filled, and the main things to check before you lodge. If this helps, subscribe for more Australian tax videos that help you save money, avoid mistakes, and do your return properly. And if your return includes rental income, sole trader income, capital gains, or more detailed ETF tax reporting, I'll link my full walkthroughs in the description. See you in the next one.